But at the point in time, I'm going to ask both Carel Van Wyk and Carel De Jager, to come up, and Fluffy Pony. We're going to have a talk about privacy, security. These guys are experts in things that people think I'm an expert in. I just like to read and talk a lot. So they will be the... You only need 3, right? Yeah. So they will be the ones taking over now. I will let them introduce themselves while I go get the additional microphones. Carel, I believe you are the moderator.
That's right. My name is Carel. Thank you for attending today. Welcome to all of our guests, local and international. I have been a builder in the Bitcoin space for many years, and today I'm joined by 2 renowned builders, world-renowned builders. We're discussing, is there a title somewhere? Can we get it up? Do we have it? Yes, but I was hoping it could be on the screen. So the title of the panel is Bitcoin, Privacy and Surveillance. And I feel like the previous 2 speakers set us up really nicely for this. Anita spoke about the importance of privacy, and Stafford, who's operating at the highest levels, driving Bitcoin adoption on government and institutional levels, spoke about the importance of having the appropriate tools that regulators and institutions can use to reduce the risk associated with Bitcoin. And so just before I introduce our 2 panelists, I'd like to root us today in the soil of South Africa. And I want to quote from our wonderful Constitution, specifically the Bill of Rights, section number 14, which states, everyone has the right to privacy, which includes the right not to have the privacy of their communications infringed. Okay? But yet today, it can be said that privacy is dead. We mustn't forget that the Bitcoin blockchain is a public ledger. All transactions are visible to everyone forever, right? And so the question that we want to explore today is, what does it mean to have a right to privacy in today's world? And is it even possible anymore? So I want to introduce our 2 panelists. First, to my right, Mr. Riccardo Spagni, known to many of you as Fluffy Pony. He's one of the world's most recognized voices in privacy-preserving technology. This is a fact. He was a founding member of the Monero core team and served as a lead maintainer from the project's launch until 2019. He's also co-founded Tari Labs and the Tari Protocol 2025 last year, a new programmable proof-of-work blockchain built for privacy-first applications. He's been a Bitcoin advocate since 2011. And he holds 19 patents in the field of blockchain and decentralized identity. He's known as a deeply technical thinker with an uncompromising stance on personal financial privacy. And then, thank you. Right. Yeah.
You guys switch places, please.
Okay.
Next to each other.
So I should be in the center. But just by the way, this is not a debate, guys. I know you want to have like a spicy debate, privacy versus anti-privacy. It's not that. This is a learning opportunity, okay? We've heard Stafford say, if we play with the big boys, then the expectation of privacy and like it doesn't exist. So to introduce Carel, so I know we've all got these fears of, BlackRock's issuing Bitcoin script and exchanges holding deposits. Do they have all the deposits they have? Carel comes from that world, auditing reserves. So he cares about keeping people honest. So Carel De Jager is the founder of Sixpence, the blockchain engineering firm behind LedgerCore. So I think we'll talk about LedgerCore today. A powerful blockchain analytics engine used for audits, investigations, and compliance. He's worked across private and public sectors, building data-driven tools for digital asset risk. Okay, he's about managing risk. He also serves as the CTO of BitMac, that Stafford announced earlier, Bitcoin mining company in Africa. Carel works closely with regulators and institutions and brings a practical lens to the challenges of privacy, transparency, and security in Bitcoin. Let's have a hand for Carel as well. Thank you. Right. Okay, guys, thanks for joining me today. I'm going to pass the first question to Riccardo here. So question number 1. Is financial privacy a human right or a laundering loophole? Why is privacy important to you? And more broadly, should individuals have the right to use untraceable money, even if that sometimes includes bad actors?
Yeah, thanks for having me, and great question to start. So I think privacy isn't about having something to hide, it's about having something to protect. Whether it's your family, your medical records, your salary, and that's just financial privacy, obviously. In terms of where I think it sits in the landscape, there's a really interesting thing that happened in 1976. There was a Supreme Court case, the US versus Miller, in the United States, and the Supreme Court was like, actually, if you're a bank customer, you don't have a right to financial privacy. That expectation's nonsense. 2 years later, Congress passed the Right to Financial Privacy Act, because they basically viewed the Supreme Court's decision as so dangerous that Congress had to step in and pass an entire act to thwart what the Supreme Court had said. So that gives you an indication that it's a civil liberty that we're talking about. It's not just something that we can hand wave around. And I think to your question about whether it's a right or a loophole, that's like saying, is your front door a safety feature or a barricade for criminals? You know, it's both. It provides both purposes and services. And so I think that where we land now in terms of whether people should have access to private money, should have access to private transactions, is viewing it through this lens. Anything can be abused. Criminals routinely use and abuse cars. Terrorists drive cars into crowds of people. Criminals use cars to go and commit thefts. Should we ban cars to prevent the abuse of them? I think we'd all struggle to have gotten here today if we did. So that's the way to think about it. It's important that it exists. And good old-fashioned policing is the counterpoint to the abuse, not providing ever traceable currencies.
Okay, thanks for that strong answer. Good, strong start. Okay, for Carel, you work with regulators, and particularly in compliance for institutions. Where do you personally draw the line between public safety and individual financial privacy?
Yeah, all right. I just want to start by saying, I know you've split us, but you know, Riccardo and I actually share similar trauma, having been the victims of a very tragic boat accident many years ago. But in any case, so I think, you know, what you said there, Rick, is actually, I mean, spot on. It is never about the banning of the technology, but putting up sufficient guardrails to protect the vulnerable, right? And if you think about, that example that you used, using a car to steal, I think we can all agree that theft and violence is not acceptable. I know that there's a whole spectrum of things that you can do, which is probably up for debate about whether it is morally, legally acceptable or not. And I think that the more we talk about that, and the better. And it is not for me as a blockchain analytics expert to determine whether any of those things are right or wrong. I personally and professionally don't care what you watch online or what you buy with your own money or what your preferred smoking ingredient is. Like, you know, that is up to you. But I think we can all agree that if you steal, if you scam, if you hurt someone else, that is morally wrong. So that is exactly where I would draw the line, as at least personally, as to what should be right or wrong. And then lastly, as a analytics company serving many of these professional institutions that adopts Bitcoin and crypto, we try to at least take a position where we would only provide them with information. So you have to realize, maybe this is also an opening statement, that Bitcoin is a public ledger, like you said, Carel. It is a public ledger, right? And transacting on a public ledger carries some degree of risk. And especially if you are unaware of that. And what we do is we read those transactions and we provide it in a very readable or understandable form. But we don't tell our clients what to do with that information. That is ultimately up to them. Like I said, I draw the line at theft and violence, personally. That's where I'll tell someone that you probably need to take action. But anything other than that, it is up to their policies of what they want to do with the info.
Okay, thanks. And let's drill into these tools that you're developing. I think maybe a question that a lot of people have is sort of, first, okay, two-part question. One is, why are these tools important? I mean, Stafford said it's important, right? But maybe just expand a little bit on why these tools are important. Why should we have them? But then also, I think there's fears from a lot of people that these tools can be abused. And in particular, I was expecting you to speak about, or Riccardo speak about this sort of dystopian future where we've got absolutely no privacy. Can these tools be abused, and is it maybe a slippery slope into a future where actually you don't have any privacy at all of your transactions at all times are reported everywhere, not only to the state but also to private actors? So, two-part question. Why do you believe these analytical tools are important? And then secondly, what safeguards are in place to prevent abuse? Are there any upper bounds to what analytics firms should be allowed to do?
Right. So the first part, I might ask you again about the second part, I'm going to forget. But the first part is about why these tools are important is because often an uninformed regulator, I can almost guarantee you can look, there's so much precedent. An uninformed regulator defaults to the adversarial side. There's no doubt about it. Right. So an explicit ban, that is what you can expect from any rational regulator or irrational around the globe. And that's the last thing we want as a country, as an industry, as anything, right? So, I mean, and then secondly, it's important because we have to have guardrails in order to keep the vulnerable and the honest people protected. I mean, I am here today because I like this crowd, right? I like Bitcoiners a lot, and I absolutely admire all of the stuff that's being built that allows people to transact and operate outside of centralized infrastructure. I mean, I think that is amazing. This afternoon, I'm going to give you a lot of tips when I do my talk, especially for developers and normal transactors, on how you could remain private as far as possible, as far as reasonably possible on the Bitcoin blockchain, right? But the reality is, even though those tools are still in development, the adoption is slow. That's incredibly difficult to get adoption for that, because you obviously trade off user experience, right? So we are still very, very much reliant on centralized infrastructure. And by that I mean big exchanges in South Africa and globally, custodians, banks, it's like stable coin issuers, those kind of things. And we've all seen what happens when these big organizations are not kept in check, if there are no boundaries. Like, see what happened to FTX. I mean, it was a massive collapse because they were running fractional reserves. Whether you are using a self-custodial wallet or not, if one of our big exchanges tomorrow collapses because of fractional reserve, it will affect you in some way or another, or one of your loved ones. There's no doubt about it, right? So at the moment, and that's where our biggest focus is I think then part of what the next question is like, what can we do? Like, obviously all of these ledgers are public ledgers, and you can infer a lot of information from it, but there's no identifiable information. We all know you have an address, you have a right and a public key, but there's no KYC. That is attributed to the venues, to the centralized actors that collect that information. Right, so that's probably where our limitations are as well, and therefore a lot of our focus and the tools and the talks and the engagements that we have with the relevant role players and stakeholders around the world revolve around these centralized institutions. If USDT pegs tomorrow, TPEGs, again, we will all be affected severely, right? We have to make sure that these centralized actors are kept in check, that they do what they say, deposit-taking institutions, that they don't go and gamble with your money, that they are actually backed, and because human greed is, right, once you leave someone else, they're going straight to the casino. We all know that.
Okay, thanks. So you made quite a strong statement there that I want to sort of just expand on. You said an uninformed regulator will absolutely act adversarially, right? And so maybe the question here is, are these tools sort of almost like a lesser of two evils? Like, can it prevent bigger problems? Like, so the way that, like, I have a service provider, centralized service provider service that I run in the space. Now the regulations work is the regulator says we allow you, the provider, to take a risk-based approach, right? But how does the provider take a risk-based approach? It needs to quantify the risk somehow, and therefore tools like Ledger Core helps them to quantify risk and manage it. So I think I forgot what I wanted to say now.
Well, I'll respond to that. And
Yeah.
I think a risk-based approach is exactly what you'd like, right?
Yes.
Because, I mean, if...
Okay, thanks. You're going to answer what I wanted to say. Thanks.
Oh, yeah. So, like, you know, and that's what the tools enable you to do. Like, you know, let me give you an example. If you deposit Bitcoin from a CoinJoin or from some sort of a mixer into an exchange, and you don't want a 50 million rand Bitcoin transaction to be treated the same way as a 1,000 rand transaction, right? Anyone that does a simple payment, anyone that acts honestly, anyone that has business secrets to protect, whatever the case may be, there's a huge argument to be made for financial privacy, and that you should leave that guy alone that does the small transaction, because there can be many, many reasons why he wanted to anonymize, you know, his 1,000 rand that he deposits. But if someone comes with a 50 million or 100 million, you know, 9-figure amount to your platform, anonymized very recently, I mean, of course you have to ask questions and you have to apply certain policy, and that's what you'd want. You don't want to be treated, if you are an honest actor, the same way as you know, as the guy that is most definitely, without a doubt, laundering money, right, or doing some sort of violent and unacceptable crime. So risk-based approach is exactly. Otherwise, like I said, it's going to be a ban. Like that is
A ban.
Like, unfortunately, you know, that is the worst case scenario. Let's put it there as the worst case scenario. That's what we'd like to stay away from at all costs. We don't want to get even close to that. Like, we all want to have this industry strive, and I think currently the way that the regulators and the institutions, how I can sum up their opinions and their behavior is that they would like to see the same.
Yeah, I think the alternative, as you highlight, to a risk-based approach is a rules-based approach. And so, Rick, I'm going to ask you this question. I'm going to make a comment, then I'm going to ask you this question. Let's say that we cannot win the privacy battle at the regulated edge for service providers, but we can stop more destructive interventions like rules-based approaches, like censorship. Is the trade-off worth making? Can risk-based analytics actually serve as a defense against more aggressive forms of control? Like, here's my comment, we have some rules-based regulations that's deployed in the last 2 years. One is the travel rule. If you don't know the travel rule says that for every single crypto transaction that you make, your personal information is shared with the receiving service provider, and vice versa. Your recipient's details are shared with your service provider. This is personal information being shared across databases. You don't know where it sits. It's like honeypots, it can get stolen. Another one now, from March this year, be aware, we've got reporting frameworks and requirements from service providers to report every single crypto transaction to our tax authority and beyond, international reporting bodies. So be aware of these things. And these are like rules-based stuff that's come out now. So, on that note, do you think that we can use these risk-based analytic tools to actually serve as defense against more aggressive forms of control?
So I'm going to break my response into two different sections. The first is just generally, I want to say that I think that comfort for regulators doesn't create boundaries. It creates expectations. And then every compliance concession we make basically becomes the new baseline, and now they ask for more. You've literally just said it. We did not have to provide that information. Centralized providers did not have to provide that information previously. Now they do. So basically, appeasement to regulators doesn't draw a line. It just says, hey, this is where you can push next. That's deeply problematic. And I'll give you an actual example of this. So there's a privacy coin called Dash. It's a Bitcoin fork. It's a clone of Bitcoin's code. It's been around for 11 odd years. The only feature that they've added that is remotely like privacy related is they have a coin join system. So does Bitcoin. There's Join Market, there's Wasabi, which is now disabled their coordinator. There's Samurai, they're now going to jail. But, point being, it's the same. It's exactly the same in terms of it providing the same surveillance technology that Bitcoin provides. Here's the thing. In 2024, Dash was the second most delisted cryptocurrency after Monero because regulators were freaked out by the fact that this is Bitcoin with some coin joiny stuff. It doesn't have stealth addresses. It doesn't have confidential transactions. It literally is Bitcoin. It's literally Bitcoin with a different mining algorithm. Okay? Now, here's where it becomes deeply problematic. In 2027, in July 2027, the new EU regulations come into play that outrightly bans Dash, amongst other things like Zcash and Monero. It's Bitcoin. They're banning Bitcoin because there's a coin join on it. Now, I think that sets the tone. As that succeeds, as every single EU entity goes, well, we can't deal with this, even though it's not a privacy coin, even though on their site and documentation they say, hey, this is not real privacy. As regulators succeed, they are going to eventually use that as a template and a model to go after Lightning. They've already gone after CoinJoin, and they've succeeded. 2 days after arresting the Samurai developers, Trezor abandoned their CoinJoin integration. Wasabi shut down their CoinJoin tools. Like, this is frightening stuff. Now, I think the challenge here is that we need to think about, like, what happens next. And I simply don't see a scenario where regulators go, oh, well, we've got a degree of comfort. If only the tools were, like, gave us more information, we'd have more comfort. Because they do have a tendency to revert to that hostile state. They do have a tendency to go, we managed to shut down these tools, but now these other tools are cropping up. And so what are we going to do? Well, we can't keep playing the game of cat and mouse. So we're going to just shut everything down. We're going to just ban things. That's not an ideal outcome. Now, the second thing I want to say is about blockchain heuristics technology in general. And this is a big concern that I have with it. And I'm not going to go into all of the bad things that Chainalysis have done because they're just a bad company and, frankly, shouldn't exist. But even if we take it that Carel's company is a good company and they're only providing the data, they're not making judgment calls. Like in World War II, you only say the Jews live in that house. You don't make a judgment call. Even if we do that, there's this really interesting analog. So many, many years ago, and this is real science, the scientists realized that you can take two hairs, like pieces of human hair, analyze them under a microscope and see similarities and go, these two hairs came from the same person. And they call it hair whatever it is. Okay. Now, that eventually became a crime scene analysis tool, and the FBI used it. The FBI loved it. They were like, oh, you were on scene because we found a hair, and we plucked another hair from your head, and it matches under a microscope. This is before DNA analysis. After 30 years, the Innocence Project were like, hey, maybe this technique's not great. So they went back, and they looked at hundreds and hundreds and hundreds of cases. 96% of them had errors. Not only that, 9 people had been executed in the States based on this analysis. 5 people had died on death row based on this analysis, which was flawed. Unfortunately, blockchain heuristics is similar. It's the TSA of security on blockchain stuff. The difference is, thank you. The difference is when the TSA go, maybe you're bad and it's a false positive and they're patting you down and making you bend over and cough and whatever they're doing, you miss your flight. That sucks. When the FBI's hair stuff screwed up, you got executed. When blockchain analytics screw up and there's a false positive, your funds are frozen. You can't pay your rent. Your family starve. These are not great outcomes for junk science. We need to do better. And appeasing regulators is kicking the can down the road, and eventually Bitcoin's going to get the same treatment as Dash. That's not an ideal outcome.
Can I respond to that? I want to respond to it.
Sure.
So I think that there's a lot of nuance, right? I mean, if you feed me 3 beers, I'll probably tell you that I think KYC is fundamentally wrong. So I think to a degree, I agree. And the reason is, I actually have a lot of data. I've studied it some years ago about the number of banking, the percentage of the world that's actually banked, and the reasons why it's so low compared to, like, for instance, mobile phone, smartphone adoption. And it all comes down to KYC. And the fact that the majority of the world actually don't have a proper identity or a proof of residence, and therefore they cannot get a bank account. So I fundamentally actually agree. I think that what you mentioned, the travel rule and all of that kind of stuff, identifiable information, I think it's redundant, to be honest with you. I think that we can get away with proper analytics tools and monitoring on-chain activity. You don't need one KYC document ever, because you can get enough information to be compliant to global watchdogs, FATF, the world, all of these World Bank, all of these regulatory authorities without KYC. Now that's a bit of a wild idea, right? And I don't think that we'd get there with at least get that message across to an acceptable level with our authorities now, but it is maybe a slow process, and maybe one day we can get there. So, and then also to respond, I think, yes, it is important to know that blockchain heuristics is a probability game. And it is very, very clearly stated in all of the analytics companies' terms and conditions. And any good lawyer, I've been in a situation in court where I actually had to fight for that what a chain analysis report actually concluded was the probability was too low for the court to accept that. So I was actually an expert witness in a case where I argued that exact point. So it can go both ways, right? So I think that, again, we'd like to keep the institutions responsible. I think and we need tools for that. There's no way. Like, we cannot give our exchanges a free range to just go do whatever they want. That will be fatal. But when it comes to individuals, there's a big nuance. There's a lot to be said about it.
Okay, cool. So one thing you just said is that blockchain analytics is a probabilistic thing, right? And so maybe if you're sitting here thinking, I don't want to take the chance, I want to do more, as much as I can to maximize my privacy. And as we've heard now, Bitcoin privacy kind of sucks. Everything's visible on the blockchain, and all of your identity information is being reported by centralized service providers. So let's get a little bit technical, not too technical, but briefly, because I still want to leave some time for Q&A, start thinking of your questions. Riccardo, what are our options then? So year to date, should we consider privacy enhancements to the Bitcoin protocol, or will it then get banned? Is layer 2 enough for Lightning? Does this offer us enough privacy, or will that get banned? Or should we consider switching to another chain, like Monero? Year to date, Bitcoin is down 32%, while Monero is up 55%. So what do you think?
Well, I'm certainly not going to advocate for switching to another chain. I think there are use cases where people will want to do that, and they have to decide for themselves based on their personal risk model, based on their personal threat assessment. Technically, it becomes really challenging. There's going to be a point where we're going to have to make changes to Bitcoin's protocol for quantum resistance. And at that point, there might be the opportunity to put something like confidential transactions in which hide the amounts that are being transacted. I think it's very unlikely that we get to change fundamental things like transaction graph tracing. I think that stuff like wallet closure analysis, where you can see the change outputs going back and thus validate that multiple addresses belong to the same wallet, I think that will continue to exist. And that's fine. I think the ship has very much sailed for well over a decade in terms of adding much into the core protocol. And I think even post-quantum stuff is going to be very challenging. We're going to face a lot of pushback from users who are non-technical but read a blog post and have asked ChatGPT and go, Bitcoin needs to ossify and have no changes. We'll have to fight that battle when we get to it. But beyond that, to your question about L2, I'm very excited about things like ARC. I think Lightning has become very, very complicated technically to make up for architectural decisions. And the biggest challenge with something like Lightning is not, and ARC and all of these other things, is not can we have privacy on an L2, but what happens when we settle back on the L1, because then the privacy gets destroyed. So, if you have a payment channel open with Starbucks and you're paying Starbucks every day for 3 years, and eventually you close that payment channel because you move countries, then sure, we're going to see that you paid Starbucks like for a lot of lattes, hazelnut oat matcha lattes, and that's not great because ultimately it gets revealed on chain. In the 3-year interim, it's not revealed, but that end state is problematic. I don't think that there is an easy technical solution, and I have sat with Bitcoin core developers. There's a RSC channel called Bitcoin Wizards, which is a lot quieter nowadays than it used to be, but I remember having conversations about this in like 2012, 2013 especially, in Wizards, talking about all sorts of ways that we can add privacy to Bitcoin. Some of that materialized in things like confidential transactions that Blockstream added in Liquid, but ultimately they did it in Liquid because they couldn't do it on chain. And I think that's kind of the position we're in now. Any truly powerful and strong privacy tools that can be applied on chain end up getting put into other chains, whether it's Liquid or Monero or whatever else. And so, your personal threat model ultimately dictates where you move. I do know that, and this is just a personal observation, I don't think that anyone should hold Monero as a store of value. I think that it has a lot of value as a medium of exchange, but I personally think buy Monero if you have a use for it, but Bitcoin has a much stronger probability of becoming a strong store of value, but Bitcoin is not a good money, and that's okay. It is more akin to gold than cash, and I'm fine with that. I've been a Bitcoiner since 2011. I don't have an issue with. I don't expect Bitcoin to be more than it is, and I don't think we should try and force it to be more than it is, especially when we have opportunities to leverage technology elsewhere.
Thank you. That's a great answer. So let's see. We've got some minutes left. If the job is saying, guys, no, but I just want to allow for maybe one, maybe two questions. Is that okay? Okay. So we've got a question there from the back from Ricky. Do we have a microphone, or should I bring this one? Okay, thanks. While the microphone's going there, I just want to say it makes me very sad to hear Riccardo, somebody I greatly admire, saying Bitcoin is bad money, because at Money Badger we're trying to make Bitcoin money. But going away today, I think we'll then look at adding Monero. Maybe we'll switch to Monero.
No!
So, yeah.
Yeah, so I don't have a question. I've more got a statement. Sorry, it's a bit against the rules here. But I think that saying chain surveillance is good for Bitcoiners is like saying mask mandates and vaccine mandates will protect you from COVID.
Okay. So can I maybe say something? I think so. The realities of you should not shy away from the realities of transacting on a public chain. So like Riccardo said, I mean, even if you transact on Monero, to be honest with you, you cannot really assume privacy forever. Monero is also subject to Shor's algorithm, which means that anything you do today with Monero might be visible in 10 years from now, right? So, because I mean, the transactional history is stored on thousands of hard drives across the world. And it is the same with Bitcoin. But there is a lot of things that you can do, like really, really, really simple stuff, low-hanging fruit, that would go a long way. That would increase your privacy, not by 100%. You'll never get 100% privacy, but you'll get 99%. This is what I'm going to talk about this afternoon as well. You know, transact through Money Badger and Lightning Network channels and peer-to-peer transactions. Those are very, very, very good practices, rather than going through the centralized payment innovations and things like that. Don't combine your UTXOs. Yeah, there's so many bad advice out there. Every time the fees are low, you see crypto Twitter and Bitcoin Twitter just fire up. Hey, it's time to consolidate your UTXOs. That's the worst advice you can get. Like, never do that, right? And then for the wallet developers, yeah, is like I actually have a request for those that's perhaps developing privacy-focused wallets. And that is like, why do all Bitcoin wallets only have one address type? Why not mix them? Some legacy, some SegWit, some pay-to-script hash, a multi-sig, whatever, and like mix them up in your change address, because having the same address type in your change address is like a big giveaway, right? So things like that. So I'm going to talk about it more this afternoon, but there's a lot of ways in which honest actors, just like some simple behavior changes, can create a lot of privacy for themselves on chain.
Thanks. Please come listen to Carel's talk later. He will give you some tips on pro-privacy tips. And then I think, gentlemen, there you have a question. We're going to be very quick. We basically have time. While you're getting the mic, I want you to think about one last sentence while you're answering a question. One final 1 or 2 sentences that you would want to leave the audience with after this question.
So just with all AI and things, is this debate about privacy not a complete waste of time? I mean, with all the documentation, everything is being allocated. I'll just look at, for example, with SARS. If they've got the AI thing work together, everything is going to become available to them, and ultimately all information is available everywhere to everybody all the time. So is this privacy debate not futile?
Is it not futile?
Quickly, yeah, I 100% agree. I mean, how many of us are wearing smartwatches and then we're worrying about our 10 Rand transaction that can be traced, right? I mean, all of our data is here, like big tech, we have Gmail accounts. It's just crazy. So I agree with you. It's like,
yeah. So I've used some AI analytics tools in Maltego and others. They're largely atrocious. AI hallucinates things. Even when you're using low temperature, well-designed tools, they still have a tendency to make a set of assertions and conclusions that don't make any sense. We're going to become increasingly reliant on them, and there's going to be a point where an AI is going to conclude something. It's going to put someone in prison. It's going to go to court, and it's going to be proven as being nonsense. And we're going to then reluctantly rely a little bit less on them for some of these things. AI is not a all-seeing eye. It is, at least in its current form, a thing that auto-completes based on training data. It's a very powerful tool. 95% of the code I write right now is written by AI. I haven't written a line of code manually in months. And so I'm not going to sit here and pretend it's not a powerful tool. But it is not some sort of secret thing that it has superhuman capabilities. And even if we do reach AGI, it's not going to have access to every piece of information on the planet. A lot of our information is well siloed. Now, that's not true for everything. And organizations are increasingly being punished where they take a lackadaisical approach to this. But I will give a big kudos to Apple for taking a very pro-privacy stance when it comes to the way they handle your data, when it comes to, and you've got to take some steps. You know, if you turn on like the advanced protection in iCloud, if you turn on the end-to-end encryption for your backups. These are steps that you can take to protect your information, even though it's being stored centrally by a company. But there are laws like HIPAA in the US, and a lot of these organizations are US-based. They're forced to comply with it. They're forced to protect your data because, frankly, you can't protect your data. You're not good at it. Information wants to be free. We're all pretty bad at it, and that's fine. I go to a great deal of effort to segregate my data, and I'm still not good at it. So I think it's really, really important that we understand and recognize that even though organizations are forced from a regulatory perspective to do that, we have to take some steps. But AI is not some, it's not a sci-fi thing. It doesn't have the ability to pierce the veil. It doesn't have the ability to see what the guys are trading cash for on Long Street. It has upper bounds to what it can do, even if it's tapped into security cameras and all sorts of things. And we need to leverage those upper bounds as individuals and corporations. We begin to take back some of the privacy we've lost over the last decade.
Okay, thanks everyone. I know it's been an intense session. We're out of time now. Maybe, do you have one last thought, final thought, 10 seconds or less?
No, I'll do it this afternoon.
Okay, afternoon's good.
I'll conclude with a quote from Eric Hughes. He wrote the Cypherpunk Manifesto in 1993, and I would encourage you all to read the Cypherpunk Manifesto. But he said something in there that has always resonated with me. He said, we cannot expect governments, corporations, or other large faceless organizations to grant us privacy out of their beneficence. It is to their advantage to speak of us, and we should expect that they will speak. And my conclusion from that is it's to our advantage to take our privacy back slowly as individuals, because that is the only way that we won't end up in a dystopian, sci-fi, post-apocalyptic future.
Thanks. Can I please get a hand for our amazing panelists?
Thanks, everybody. Thanks, guys, for sharing.
Just as a